Thank you, Michael, and thank you to everybody for taking your time out to join us today. This is everything you wanted to know. Take us by the hand for the PPP second draw. What I'd like to do, first of all, today is give a very special welcome to our guest speaker, Nicole Cunningham, partner in client relations, H&Co LLP. I know everybody has a tremendous amount of questions. I already have been following them and reading them in the chat room. So today, Nicole will take us through and answer all of our questions. We also have, if she's just not on yet, and that is Althea Harris, Supervisory Outreach and Marketing Specialist for the Small Business Administration. So whatever questions we can't, that come in, that Nicole is answering for us. If Althea has any input for those, she'll just jump right in when we get to the questions and answer. We're also, as Elaine was saying hello to everybody as they come in, we have partnered with several chambers with us today. So what I will do is read through those chambers, and if you're here, just please give us a quick hello so everybody can put a name with a face and a chamber. Evan Piper, Greater North Miami Beach Chamber. You here, Evan? Unmute yourself.
He's not here.
Going once.
Oh, he
Going
is.
twice.
I don't see him. Okay.
Norma English, Greater Hollandale Beach Chamber. Norma?
Good afternoon, everyone. Good afternoon.
Perfect. Thank you, Norma. Thank you for joining us. Randy Shane, is Randy here? I didn't know if I saw Randy or not from the Greater Dania Beach Chamber. Randy? Maria Suarez, Greater Hollywood Chamber. All right, we're having a lot of luck with this. Maria Suarez, Greater Hollywood Chamber.
Maria's not here, but we're represented anyway.
Perfect. You want to introduce yourself as representing the Greater Hollywood Chamber?
Yeah, I'm Helen Vallabasala, and I'm a board member of the Hollywood Chamber, and we also have Michael Miller from the Business Development and Tammy Ion, who's our events manager.
Thank you for taking the time out and joining us today. Thank you. Carrie Black, South Dade Chambers. Carrie here? All right. Elaine, did I miss anybody?
Gary?
Yes. Leslie?
Myself, Leslie Lowenthal, Executive Director for the North Miami Beach Chamber. Hopefully Evan will be on soon.
Perfect. Thank you, Leslie. And now, we'd like to get these programs started, but first, let me give a shout out to Michael Stern, not only our rules coordinator, but our infamous Zoom administrator, as without him, we wouldn't be able to do these weekly Zoom meetings so efficiently. So thank you, Michael, again, for giving your time today to help us with this. So now, I have the pleasure of introducing Nicole Cunningham, as I said, partner, client relations for one of Florida's largest CPA and financial services company, H&Co LLP. Nicole is an accountant. She's been dealing with the PPI programs with her clients since the very beginning. She's been through all of this numerous times. We were chatting before, so she's ready to go through the program, answer all your questions that we have for anything that comes up. We know many of you have a lot of questions, let's just say, as things change, not only rapidly, but really, you could say, on a daily or hourly basis. And as I also said, we also have, if she hasn't joined us yet, Althea Harris from the SBA with us, just in case we have any other questions that need to be answered. So without hesitation, Nicole, I will turn it over to you if you'll give us just a brief introduction of your company and then move right into the PPP second draw loan program.
Absolutely. Okay, and I'm going to go ahead and share screen. Good morning, good afternoon, everyone. My name is Nicole Cunningham. I'm a partner at H&Co. Company. We used to be Hernandez and Company, shortened it to H&Company, and now it's just H&Co. We are a CPA and advisory and assurance firm located throughout South Florida. We have offices in Miami, Brickell, Fort Lauderdale, and just recently Aventura. I've been with the firm since 2009, so about 11 years, and I oversee all client services, client relations. I'm a prior accountant. I'm also a board member with the Spain-US Chamber of Commerce in Miami. Obviously, we have a very large international market, so we have a lot of relationships with foreign chambers doing business in the US. So this is a little bit about me. At the end, you'll see my contact information for any other questions that may come up later that I'm not able to answer during this because you thought of it after the meeting. But anything that comes up, please go ahead and write it out if you feel like it's something you'd rather discuss, because it's sometimes these topics are a little bit complex. You can go ahead and unmute. Sorry if I'm changing the rules, and see if we can discuss it that way. But let's get into it. Okay. Important disclaimer, because this has been something that keeps changing. This information I'm going to present is all obtained as of today. I scoured the web this morning to make sure that there was no major changes or new IFR rules or new regulations that were issued that may have clarified something. So everything is as of this morning. So if you hear something tomorrow, it may have come up tomorrow. We saw that a lot with round 1, and we can expect the same for round 2. Before we get into the second draw, let me touch base on one of the questions I saw about round 1 PPP, which prior to December 26, it wasn't certain that those expenses that were paid with PPP funds could be deductible against income in determining your taxable income. Congress voted to change that. It was signed into law, and the IRS issued another notice saying that yes, any expenses paid with PPP funds are deductible and will not count as taxable income. So it'll be non-taxable income. And kind of jumping ahead a bit, that income from the PPP funds will not be counted towards your gross receipts amount when you're calculating the reduction, which I'll go further into. I'm going to do an overview of the program, touch base on very specific items, and then show you a sample application step by step, showing you what goes in which little square. But it's important to understand the program itself, the eligibility, and the forgiveness terms, because I saw somebody mention that they're only interested in this if it's a forgivable loan. So in summary, this is the second draw of the PPP, Paycheck Protection Program loan that came out in the CARES Act. PPP, very important to note that it actually stands for Paycheck Protection Program. Paycheck protection, meaning you have payroll. The government understood that everyone had to close down, make some changes. So they wanted to supplement your payroll by offering this program that was a loan. The intention was to offset the demand unemployment would face. So they were gonna give businesses amounts to cover payroll so that they wouldn't let go of those employees and that those employees wouldn't go overwhelm the unemployment system. It's worked to some degree. Of course, it's not a perfect program, but it has done, in our opinion, a great job. We've seen a lot of clients benefit from this and have been able to save jobs. And this second round is a very welcome, it's a very welcome program. So the second draw loan funds can be used to fund payroll costs, including benefits. I'll cover that in detail. They can also be used to fund mortgage interest, rent, utilities. And what they changed and expanded is that it can also be used to cover worker protection costs, uninsured property damage costs due to any looting or vandalism that had occurred in 2020. So that, I don't know if, I mean, it was an issue in amongst the US, but I don't know if South Florida had too much of the brunt of that. And then also supplier costs and expenses for operations. First round was only payroll, mortgage interest, rent, utilities. This second round expands to include these additional expenses. You can meet full forgiveness term based on how the funds are used during the covered period. A covered period is always going to refer to 8 to 24 weeks upon receiving the loan. So you receive the loan funds into your bank account, that's day 1. Before, you had to choose an 8-week or 24-week covered period. One of the rules changes is that now you can select anywhere from 8 to 24 weeks. So if you want to use a 13-week covered period, that is an option. As I go on, you'll see why would anyone do that instead of the other. You also have to maintain employee and compensation levels similar to the same manner it was required in round 1. The loan proceeds must be spent on payroll costs and other eligible expenses. And to qualify for full forgiveness, 60% of the proceeds must be spent on payroll costs. So while these other expenses, such as worker protection, uninsured property damage, supplier costs are allowable, they are allowable because this essentially is a loan, but it's a loan that can be forgiven. So if you want to achieve full forgiveness, 60% of the proceeds must be spent on payroll costs. There is targeted eligibility for this second round. So if anyone has questions regarding first draw, these terms don't necessarily apply to you. This is purely second draw terms. So to be eligible for the second draw, you have to have previously received a first draw, and you have to have used or will use a full amount for authorized uses and have spent it by the time you get the second draw. You can't have more than 300 employees. First draw, it was 500, now it's 300 amongst all affiliated companies, which we'll go into. However, if you're a restaurant or a hospitality company or anyone that has the business code or activity code starting with 72, so long as you don't have more than 300 employees per physical location, you can qualify. And then the third requirement that is, in my opinion, causing the biggest disturbance, because a lot of people are not being considered eligible based on this, is that you must be able to demonstrate a 25% reduction in gross receipts or gross revenue, we'll cover that, between comparable quarters in 2020 versus that same quarter in 2019, or from 2020 to 2019. Let me see certain questions. Okay, if I did not have, I see a question, if I do not have a first PPP loan draw, am I eligible for the second one? No, but you would be eligible for the first draw. So that was a question from Marina Gran. Will you be eligible for second? No, you'll be eligible for the first draw. First draw doesn't have the requirement to demonstrate a reduction in gross receipts. And first draw also has it if you have up to 500 employees. However, you must have been in business as of February 15th, 2020 and had payroll costs in order to be eligible for the first draw. So another question I'm seeing regarding the gross receipts is all quarters work or compare 1, 2, and 3 only. All quarters work. So if Q4 2020 versus Q4 2019 had that drop in revenue, you could use that quarter, but any other quarter can apply. And that's a little bit different. I think I hear a question, or never mind. So the maximum loan amount for the second draw, similar to the first draw, is going to be 2.5 times your average monthly 2019 or 2020 payroll costs, and the cap is 2 million. If you're a restaurant or hospitality, for this second draw, you're eligible to get a 3.5 times your average monthly payroll for 2019 or 2020. Most people will use 2019 because 2019 had higher payroll costs, but you could use 2020 if that worked out for you better, or if you want to get a lower loan amount because you may not have, it may be more difficult for you to meet the 60% requirement. Any amounts of the loan that are not forgiven are converted to a regular 5-year loan at a 1% interest rate. The payments are deferred and there's no cost, there's no collateral, personal guarantees required, and the government nor lenders will charge any fees. It's important to note that if your business is part of a single corporate group, you cannot receive more than 4 million in PPP loans. So while each individual borrower can get up to 2 million, those in a single corporate group, if everyone applies for their own, they can't go over 4 million. First round, you couldn't go over, it was 10 million cap and then 20 million amongst a single corporate group. For the second draw, because there was a lot of issue in the first draw about who was being granted the ability to obtain the loan, they're making sure that $25 billion is set aside for borrowers with a maximum of 10 employees or for loans $250,000 or less in lower moderate income neighborhoods. So there is special eligibility for certain companies in certain neighborhoods. The PPP program in general opened up like a week after it had opened up to this first group. This time around, there's no major rush as there was the first time. I'm hearing from different bankers that they consider that they'll have enough funds through March 31st, 2021, which is a deadline to apply for the loan. So, and that's because a lot of people are maybe not qualifying due to the eligibility requirements. This is an expansive list, but it's important to share as to who's not eligible. So obviously anyone considered involved in illegal activity, anyone related government, certain government officials, if your business was not in operation on February 15th, 2020, if you received a shuttered venue operator grant. So you could have received an economic injury disaster loan or certain other SBA program loans. You can't be on default on those. You have to be in good standing and still qualify for PPP, but you cannot have received a grant under the Shuttered Venue Operator Grant Program and be eligible for the PPP. Shuttered Venue Operator Grant was for companies running different venues that had to and still are closed down. So if you received one of those grants, you're not eligible for PPP. If you received any other SBA program, you may still be eligible so long as you are in good standing with that. Hedge funds or private equity firms engaged in investment or speculation are explicitly not allowed to participate in PPP. If your business is permanently closed, if you're in any bankruptcy proceeding, you may be ineligible to receive the PPP loan. This is other, if you're involved in political or lobbying activities, certain entities organized under the laws of the People's Republic of China. There's a lot of special rules about China. So if you have some involvement with China, you want to read this a little bit more detail. I'm giving you just the general gist of it, but there's some things that are very specific. If you hear anything that calls your attention, I can share with you the full IFR rules and give you a full detail of exactly what they're specifying. So that's who's not eligible. We're going to jump into qualifying, assuming you're under the 300 employees. Now we're going to look at the main eligibility rule, which I see is putting the biggest hurdle between entities applying, and that's meeting the gross receipts reduction. Let me see before I go into this. Okay, for the second draw, my bank says you need to apply first for forgiveness before even going to the second round. I have not heard that. It has said that you only have had to have used the funds, but you did not have to apply for forgiveness in order to qualify for, sorry, I'm reading this, okay. You did not have to qualify for forgiveness in order to meet the second draw, okay? So if your bank's saying that, ask them where that's shared. Maybe that's their own. Every bank can have their own specific requirements, but they don't necessarily mean that that's the rule. The rules are very general as to what they put into the IFR guidance. But if a bank says that they won't accept you because until you apply for forgiveness, that may be the bank's own policy. And we have seen that banks are able to make their own policies. So that's something to consider, but it's definitely not the general case. So the 25% decrease in gross receipts comparable to that same quarter. Gross receipts include all revenue in whatever form received or accrued in accordance with the entity's accounting method. So I want to pull up something I'm going to be jumping back and forth with. Hold on, let me make sure the chat is going okay. I think I'm seeing, okay, let me get to one question. For the second draw, my bank, no, I'm sorry. That was a question about forgiveness. So this is a sample 1120S. I just pulled up 2020, but assume it's 2019.
Nicole, I apologize. You're not sharing your screen. I didn't want to interrupt you.
Okay.
Yeah.
Have I not, okay. Can you see my screen now?
Yeah, you're good.
Okay. But before it was not sharing either? Okay.
No, but you're doing a great job.
Okay. So this is the part that I want to make sure everyone's seeing, and this is about the gross receipts portion. I'll share this presentation with everyone. The first slides were just what I was explaining, but these next slides and sharing the screen is very important from this point on out based on what I'm going to show you. They want to see a financial statement, your bank statements, or anything that proves the reduction in gross receipts, but it has to be based in the same accounting method as you filed your tax return. Everyone has the option to file their tax return. Well, some companies have to file an accrual, but you can file in cash or accrual. So for example, this is a partnership return. If you look up your 2019 under check accounting method in the first page, you'll see whether it's marked cash or accrual. That is the method by which you have to extract the financials from QuickBooks, whether it's cash or accrual. You cannot file in cash and then obtain your financials in accrual basis showing that reduction, because that's not apples to apples or oranges to oranges. So in the 1120S, you'll see that in the second page. So if you file an 1120S, your accounting method is probably cash or accrual, and it's definitely on Schedule B, which is page 2. This is a Schedule C if you're a subcontractor and you have an LLC in which you're a single member owner. This is a sample. The way your accounting method is filed is on line F, so cash or accrual. That's a very important point because I've seen some of our clients apply and they've submitted to the bank accrual statements, but their tax return is in cash. The bank will not accept that. You're delaying the process. So you want to look at your gross receipts comparisons based on the accounting method that you have used in your last filed tax return. Your tax return is going to be something that you have to submit to prove that. If your loan's under 150,000, you don't have to prove this at the time of applying, but you will have to provide it at the time of forgiveness. And you are certifying under penalty and perjury that you do meet the 25% reduction in gross receipts. So don't ignore it just because your loan's under 150,000, as you have to certify, and you will have to provide this information at any point, but particularly when you are applying for forgiveness that you meet this gross receipts reduction. I'm going to show more samples of this, but let me cover specifically what gross receipts means. It means all revenue in whatever form received or accrued in accordance with your accounting method from whatever source, including sales of products or services, interest, dividends, rents, royalties, fees, or commissions, reduced by returns and allowances. So it can also be considered total income plus cost of goods sold, because total income would be your net. But this is not net, this is gross receipts. So if I invoiced $50,000 and then in 2019 and in 2020, I invoiced for the year $10,000, it doesn't matter if my net income was higher or lower in one year or the other. They're looking at gross receipts because that's what they're using to understand the impact COVID had on your business and therefore your necessity for obtaining a loan that may be forgiven to pay for payroll. It's important to note gross receipts does not include net capital gains or capital losses. It also doesn't include sales tax that you collect, but if you want to look at the comparison and you've always included sales tax that you've collected from the sales of products in your gross receipts or gross revenue, you can look at that. You would then have to itemize it afterwards to explain what's included within there. It also doesn't include amounts received from related or domestic or foreign affiliates. So if you have a foreign affiliated company or a domestic company and they pay, let's say they pay rent because you own a warehouse through one company and your other company owns the business that pays a lease, those payments or transactions wouldn't be considered part of the gross receipt. Amounts collected for another by a travel agent, real estate agent, advertising, conference management, freight forward, or customs. That's it. They specifically mention only those. Therefore, if it's received by anything else, it's included as gross receipts. Forgiven loans, or even loans that are not necessarily forgiven, but that you have a assurance that you're going to meet full forgiveness and will apply for full forgiveness, those amounts are not included in your gross receipts. Everything else will be included in the gross receipts analysis. Okay, let me see if I see any question regarding that. So, for example, and I'm sharing my screen. I'm showing an Excel. If you don't see an Excel, somebody speak up, but I'll assume the Excel's showing. They want you to include gross receipts for affiliated companies. Affiliated companies is any company of which a 20% or more owner owns more than 50% of. So if I'm applying for this company that I own, let's say I own 30% of this company, but since I own more than 20% and I own more than 50% of this company and more than 50% of this company, you have to combine the gross receipts to see if you meet that decrease. So 2019 in invoice based on cash, let's assume cash method, I had 400,000. The following year, while my borrowing entity might have gone down, together they only went down 10%. So I don't meet it based on Q1, so forth and so on. But here in Q4, I do meet the gross receipts reduction of 25% or more. And even year to year, I meet that 25% gross receipts reduction. So if this was not 25, let's say that I only went down 20, but I did have one quarter that was more than 25%, that did have a reduction of more than 25%, then my borrowing entity is eligible for the PPP loan because I passed the gross receipts test. So more specifics on gross receipts. This is an example of it, but then they also have provisions from when you were not in business the entire year, which is very important to note how that will apply. So again, it could be any quarter in 2019 versus that same quarter in 2020. It could be year to year, but if you were only in business the first quarter of 2020, which was a requirement because you had to have been in business February 15th, 2020, then you can compare to any quarter in any second, third, or fourth quarter in 2020. If you're only in business for 2 quarters of 2019, then you can compare any quarter in 2020, so forth and so on. So depending on how long you've been in business, you have more quarters by which to choose from. If you're in business all of 2019, then any quarter in 2019 versus that same quarter. Does that make sense to everyone? Because this is a very important part. Let me see if there's any questions specifically regarding this. Okay. 25%. Do I need to have this 20? So if I apply now for the first time, do I need to have this 25% reduction? No. If you're applying for the first time, you don't need to meet this reduction, this 25% reduction. All you have to meet in order to apply for round 1 of PPP is that you were in business as of February 15th, 2020. You had payroll costs and you have less than 500 employees. Round 2, you have to have less than 300 employees and you have to have the 25% reduction in gross receipts. And please recall, this is based on affiliates. You can be affiliated for many reasons. This is an addendum that many banks I've seen are requesting that you submit with your application. And this is the application that I'll cover shortly after we get this point really squared in. There's affiliation based on ownership. So affiliation based on ownership is when there's a 20% or greater owner of the borrowing entity that has 51% greater owner in another entity. When that's the case, you saw in my example, you combine the gross receipts and you combine the number of employees to make sure you're under the 300. There's also affiliation rising under stock options, convertible securities, and agreements to merge. There's affiliation based on management. This is a common one that can happen to many. And that's when the CEO or president controls the management of one or more concerns. An existing 20% or greater owner of the SBA manages and controls the daily operations of another business, having the power to make critical decisions for the business. So while those companies are separately owned, they share common ownership of 20% or more, and there is a common manager management. Therefore, you'd have to combine those 2 companies' gross receipts to see if any quarter does have that 25% reduction. When it comes to related individuals, family members, there's affiliation based on identity of interest. So if I have a company that is a dry cleaning company and my brother has the same company that's a dry cleaning company, given that we are in similar business or economic interests and we're related, those businesses may be considered affiliations. And you can try to speak with the SBA in certain cases that are not quite sure and see. And there's few exceptions, but the exceptions apply to for religious organizations. This is therefore the addendum. So here, affiliated company who's affiliated to the borrower, and it's any company that meets these requirements. Those are the companies whose gross receipts you'd have to combine. And there are rules based on how long your business has been around. And if you were only around Q1 of 2020, then if Q2, Q3, or Q4 of 2020 had that decline, you would be eligible. So there's different ways to be eligible. It's just a different way of measuring it. Documentation to provide as proof that you sustained at least a 25% reduction in receipts. If your loan is $150,000 or less, many banks do not request that you provide this at the time of applying, but you will need it at the time of applying for forgiveness. And to reiterate, this is for PPP round 2, not for round 1. So these are the following primary sets of documentations that you can use to substantiate. It's good measure to make sure you have this in advance, because again, you're going to certify under penalty and perjury that you do have that 25% decline. The only thing is that you don't have to provide documentation upon applying, but you may need to at a later time. I did see one bank say, that regardless of whatever your loan amount is, they do want to receive that up front, because the banks are only getting paid back by the government when they issue applicable loans. So they do have some measure of responsibility in ensuring that this is accurate. So quarterly financial statements, if they're not audited, the applicant must sign and date the first page of the financial statement and initial all other pages. Quarterly or monthly bank statements, that would only be relevant if you are a cash-based accounting, because if you're accrual-based, you're recognizing revenue when you issue the invoice for the service. So quarterly or monthly bank statements, a quarterly financial statement, or annual income tax filings of the entity. If you've not filed yet, the applicant must fill out the return forms, compute the relevant gross receipt value, and sign and date the return. That should be the return that you end up filing with your accountant, but you don't have to have already filed it. It just has to be the same return that you're going to use. Okay. This is something that gives you a guide as to where you can find those different lines depending on the type of form you follow. But let's go into a sample of the application. Let me also see, how do you apply for forgiveness with the first draw? Let me cover the application, and then we're going to go specifically into forgiveness. It's going to cover round 1 and round 2. But for applying, it's a very simple application. This is purely a sample. Every single bank has their own version of these same questions via their own portal, their own link. They may send you to a separate site, or some banks may actually even accept this application form. But this application form is not necessarily what Bank of America, Citibank, Chase is using. They're using the same questions, but it's not this page. So this is purely as a demo. Depending on your lender, you will have to do it via their system and their portal. They're pretty user-friendly, and I've seen all of them, and they're more or less the same. So you have to mark your business. Check 1. Sole proprietor means that you're a subcontractor, you're not incorporated, you file a Schedule C, you don't have any entity associated with your business. And that means that everything's filed on your Form 1040. Partnership, it's a limited liability company filing as a partnership and filing a Form 1065. C Corp, you file an 1120. S Corp, very common, you file an 1120S. LLC is, you could be a single member LLC, meaning that you still file everything within your Form 1040, but you are not necessarily a sole proprietor. You have an LLC that's not a partnership, and it's a disregarded entity. Independent contractor, these are all words kind of for the same meaning, but it's not, you can't get this too right or too wrong. Like the banks will have a safety net to make sure everything's being filed accordingly. 501c3s, it's Form 990 or 990EZ. These are charitable organizations. 501c6s, many chambers are 501c6s, and they marked this, and they were kind of excluded the first round, and they're allowed the second round. Housing cooperatives, veterans organizations, tribals, and others. Your DBA, only if you have a registered DBA with SunBiz, otherwise if you don't have to put anything. Year of establishment, they want to make sure you've been in business based on that you've been in business at least prior to 2020. And I'm sure if you put 2020, then there's going to be more questions to make sure you were in business as of February 15th. NAICS code. This is what's filed on your tax return. And it's for Schedule C, self-employed or an LLC with one owner or a subcontractor, it's going to be B. 541100 is the NAICS code for somebody in the legal profession. If you are a S Corp, it's going to be on the first page, and they are going to want to see your tax return to make sure that that's the same NAICS code, because restaurants and hospitality organizations get 3.5 times the amount of PPP loan. So they must have an NAICS code filed on their last tax return that starts with the 72. If this doesn't apply to you, then don't worry. It's just the NAICS code that actually applies to your business. Most returns will have it on the front page for the Schedule C. Within your Form 1040, this is under Section B. And there is a table of, this is just a sample of all the various NAICS codes, but if you Google NAICS and you type in your business, it'll show you which number applies. But this is not too, don't get too worried about that unless you're a restaurant and your tax return did not file using your restaurant, the 72, there's some workarounds for that. Business TIN, your EIN, or your SSN if you file under as a sole proprietor. This is a tax ID number. You're very familiar with it, I'm sure. Your business phone, email, primary contact, and address. Then the average monthly payroll. You can use 2019 or 2020. For many people, it'll be very simple to use 2019 as you have already had to go through this process in order to get round 2. If you're if you're applying for the first time, 2019 information is also probably going to be a higher amount than 2020. So you're gonna, for the most part, use 2019, and I'll show you exactly what goes into this payroll amount. So this first part was just the basics. This average monthly payroll is, if you're applying for the first round or second round, they want to reiterate and make sure you're getting that exactly right. Okay, so for the self-employed, as this is very common, I'm going to cover this one specifically. Your payroll amount, if you don't have employees, is going to be line 31 because you didn't have payroll necessarily. So this is already, we're talking about PPP loan amount, not the qualification. The qualification would be in gross receipts or sales, whether it's in your financial statements or bank statements. Now we're talking about the actual loan amount. If you're self-employed, an LLC owner, sole proprietor, you have a Schedule C within your Form 1040 that was filed for 2019, and you will look at line 31, that amount divided by 12 times 2.5. If this amount is over 100,000, you're still going to cap it at 100,000. So it's line 31 of your 2019. If it's 0 or less, you won't qualify for any PPP loan amount. But if you have any amount here, capped at 100,000, it's that amount divided by 12 times 2.5 is going to give you your PPP loan amount, because that's what they're considering the equivalent to payroll for any self-employed individual. If you have employees and you're self-employed or you're filing a single member LLC Schedule C, you would use this amount, but then you'd also include the annual wages and salary that are reported on Form 941. That's only going to be not owner compensation. So the 941, the annual or each quarter or the annual amount divided by 12 times 2.5, unless you're an NAICS code of 72. Let me see if there's, for PPP2, what financial records have to be submitted with the application? Okay, I don't think that question is specifically to this, so I'm going to continue with the loan amounts. Now, for a partnership, I saw this mistake very commonly, and I want to emphasize so you can get it right for this second time, because in round one, it was a little bit unclear. If you file as a partnership, your business files as a partnership, and let's say there's 2 partners, and let's say you also have employees. You have to calculate the owner-employee compensation first, and then add in the employee portion of it. The owner's compensation comes from your K1 box 14. If you don't have an item in box 14, but you have business income, that won't qualify because those weren't self-employment earnings. Basically, anything that was subject to payroll tax or subject to self-employment tax is the only amount that's going to be helping you to qualify for any PPP loan amount. Partnerships have a specific difference than any other entity, in which they have to multiply that amount by 0.9235, which is a deduction for the payroll taxes paid by the employee to arrive at the total. So if each partner was paid, let's say 80 and 60 in self-employment earnings, as it appears on box 14 for their K1 in 2019 or in 2020, if they're able to do their return already, those amounts are multiplied by 0.9235 to arrive at the total, sum up the payroll costs, which are considered the Medicare wages. And I say Medicare wages because Medicare wages are all amounts considered payroll. Sometimes something on the W-2 will be less than the amount that's on Medicare wages, and that's because Medicare wages will include employee contributions that are then deducted from their actual wages. So you're gonna wanna look at the 941 wages. 941 forms are also what have to be turned in when you're applying. Any employer paid insurance, not including for partners, and any employer paid employee retirement benefit, not including partners. Same for S-Corp owners. They do not include the insurance paid for S-Corp owners, but they do include the retirement. Okay, we'll kind of cover that again, but in general, let's go to the payroll cost definition. This is if you're applying for round 1 or for round 2. They want to reiterate what exactly went into your loan amount the first time. So you will have to provide the 941s, the W-3s, as well as the revenue reduction if you're only doing round 2. So they've been explicit in finally defining employee benefits. And now it includes group healthcare, group life, disability, vision, or dental insurance, including insurance premiums and retirement. So those are the benefits that if an employer paid can be considered as part of your payroll costs at arriving at your highest loan amount. Anything that's expressly excluded is any amounts for employees paid over 100,000. Therefore, if you paid an employee, let's say you have 2 employees and you paid one of them 80,000 and you paid the other one 120,000, it doesn't matter. You're gonna only count that as 100,000. So that's your total amount. Even though you did spend 120, you're capping it at 100,000. That's your total amount in payroll costs annually, divided by 12, take that amount, multiply it by 2.5, that would be your maximum PPP loan amount. Now, if you have employer contributions for employee insurance and employer contributions for employee retirement, you can include that to arrive at your total annual payroll costs. You're gonna wanna look at 2019 or 2020, whichever one has a higher amount. For most, it'll be 2019. And depending on how you filed your tax return, there's certain specifics information. I'll send this to everyone as well, because this is the best, most helpful sheet that they've provided, and it's how to calculate the revenue reduction and also how to calculate your maximum loan amount. Those are the amounts that are then going to go back into your average monthly payroll. That's why that's very important to applying for your loan, because you have to include the average monthly payroll and you have to supplement the documents to verify that amount. Documents being your payroll tax reports, Schedule C if you are self-employed with no employees, and your employer paid contributions for retirement and health insurance. This second portion is where you're going to detail the gross receipts. So even if you're applying for less than 150,000 and perhaps you don't have to supplement the actual documentation, you do have to put the amount within here. And when you apply for forgiveness, everything should correspond. So don't try to include a guesstimate, because this has to correlate to the tax returns that are filed. So whatever quarter you choose to that same quarter, do that example of gathering your gross receipts in that Excel. I can share that Excel with you as well and put that information there. If you just use the year, you can just remove that. Oh, this is a PDF, so I can't touch it, but quarter to quarter or year to year, average monthly payroll, that's it. Those are the only two major amounts that you have to include in this round 2. If you're applying for round 1, it would only be this first part. And you're gonna have to then certify the questions that they're asking, which are make sure you're not delinquent, that you're not involved in anything illegal, that you're not a 20% or more owner of another entity which is involved in any of these indictments, and additional signatures. This is very, very delicate, important information. There's been significant arrests since they've issued the PPP program, so this is not to be taken lightly. Read every question, make sure you're comfortable with it, and that's basically the application. Now, qualifying for forgiveness is a separate matter. Qualifying for forgiveness means that you have to have spent at least 60% on payroll to meet full forgiveness and maintain the same employee and compensation levels. So payroll costs for forgiveness will also mean the same exact rules and definitions that were included when you were determining your first loan amount. I have a sample calculation. And if you apply if you're doing round 2, you may be familiar with the Schedule A. If you're doing round 1, this is Schedule A, which many banks still required, even though some people were exempt from having to complete it, but it's a good practice to have it and organize in general. You can put all the payroll costs that qualify based on the limits of 100,000 for employees in Table 1, which were anyone paid $100,000 or less. Employees in Table 2 paid $100,000 or more, but that were capped for the covered period. And then compensation to owners was left out of that. Some people included compensation to owners in this portion, and that is incorrect. The banks are very delicate in reviewing these forgiveness applications, so everything has to be done correctly. What I want to show you is how the interplay of a reduction in FTE. It's a little bit difficult if we have round 1 and round 2. So I'm speaking FTE, even though that has to be specifically defined for round 1. It would probably be another 10-minute saga, but we can discuss that offline. So in this example, there's a loan amount of $90,875, but they want to know how much payroll did you spend in the covered period. So let's say you choose a covered period of 24 weeks. Obviously, they only gave you $90,875, but you were able to spend in payroll costs during that 24 weeks, $180,000. Let's say you didn't include any other amount. You reduced employees you went from 8 employees to 7 employees, which caused an FTE quotient of 8.75. So that amount is multiplied against your line 10, which produces 157. So if your loan was for 180, your forgiveness amount would be 157. But because your loan amount was $90,875, that still ends up being the lowest possible amount, which is why you're still able to qualify for full forgiveness. Now, let's see what happens if I spend only $25,000 and I spend $50,000 on everything else. Remember the 60% rule? Well, they're going to multiply the amount that you spent on payroll costs by 60%. So if I spend $25,000 only on payroll costs during my 8 to 24 week covered period, then my forgiveness is only going to be $41,667. So that means that the remainder is now a 5-year loan at 1% interest. Maybe that's not a bad deal for you, but to meet full forgiveness, you have to spend 60% on payroll during your covered period. And you can spend the rest on the other expenses. So if I spend $75,000, and let's say spend, you also have to spend it all on these amounts. So you spent a total of 112, assuming we have that FTE reduction of 0.88, The lowest amount, that amount is 98. This amount is 90,875, which is my PPP loan amount. And payroll cost is 125 because I spent at least 60% of this total amount on payroll. So there's different ways of qualifying for forgiveness. It's actually relatively easy to qualify for forgiveness. It's difficult the less employees you have, because if I go from 8 employees to, or if I go from 5 to 3, then my quotient diminishes greatly. So now it's getting harder to meet full forgiveness. In this capacity, I'm only getting forgiven for 67,200. So these calculations, it's assumed that are going to be the same calculations for forgiveness for round 2, with the addition of these additional expenses that you're able to include. We recommended a lot of our clients to use the 24-week period. We'd get all the payroll costs that were spent. In total, very often exceeded the PPP loan amount, so we had some room for reductions, but there's very much an interplay between the amounts you're spending, the reductions, and the obviously if you reduce wages, that causes another reduction. But it can be easy to apply for forgiveness if you plan it out and you choose your covered period accordingly. So round 1, the qualification for forgiveness, same thing that I'm going over here. Round 2, you will be eligible to qualify for forgiveness same way. If your loan is under 150,000, it'll be a simpler forgiveness process, but it still has to meet the same rules. It's just that your documentation requirements are not as hefty, but these rules still exist as we know them for this round 2 of the application. Let me see what else I'm going to go over, and in case anyone has any specific questions that I may not have answered. So this is the allowable uses. This I didn't cover, so I'll cover it again. Payroll costs, mortgage interest payments, rent payments. Remember, the focus is on payroll costs. At least 60% on payroll costs to meet full forgiveness. The rest are this allowance of covered expenditures, so any business softwares, any property damage that was a result of vandalism or looting, any covered supplier costs, which had to have been costs necessary for the business to exist and function and that are essential to the operations. PPP enhancements, so that's now allowable because many businesses that have had to do these improvements, and that has been a cost, so they're allowing you to use those funds for that. So that's the definition of everything you're allowed to use it on. I like to focus on payroll costs to make sure everyone qualifies for the full forgiveness. And I'm going to leave this one slide up that has all my contact information, our website, while I answer any questions that might appear. And I invite you also, we have hcoadvisors.com/coronavirus, or here through the blog. We have a lot of resources and webinar recordings of 2-hour presentations on these topics. So this was an overview. You want more detail? There's a lot more within here. And I'm happy to answer any questions that are sent to me via email. So let me go to the first questions I had seen and make sure I covered those. It says, when I prepare and submit the application, do I need to submit all proof of reduction of income and other required documents at the time, or does the lender ask for them later? If your loan's under 150,000, you don't have to provide that documentation at the time, but they will ask for them later. Some banks are asking for them upfront, even though it's $150,000 or less. Are the PPP loan proceeds counted as income? We are assuming that the same rule will stand and that the PPP loan proceeds are not going to be considered taxable income, and you will be allowed to deduct it against any expenses paid. You will be allowed to deduct. Expenses paid by PPP funds like payroll and rent, can they still be deducted as business expenses? Yes, the deduction still exists. If I submit the application and I'm missing some documents, is there a phone number I can call to discuss? That's with the bank. Every single bank has their own different way. You can't call the SBA. You can only call your lender to discuss your loan application. So please make note of that. What if we do not have Form 1040 or Schedule S for 2020? They do allow you to submit a pro rata form, even if you did not complete it yet. So I do a word search for Schedule C. They say that if you are using 2020, then you can submit, okay, here it says, if you're using 2020 amounts and you have not yet completed a 2020 return, fill it out and compute the value. So that's the pro rata form that you can submit. It doesn't have to have been filed with the IRS, but you are able to use the 2020 form, which is available, as I showed you. You can Google and it'll show you this form. So if you need to real quickly apply for using 2020 and you aren't able to complete it, you can complete this form. This has to be the form you submit to the IRS. I've seen some issues arising when one form was used to apply, the other form is used to submit to the IRS. No, it must be the same form that's applied everywhere. Okay. So somebody mentioned that they're interested in the forgiveness portion. Yes, you qualify for full forgiveness so long as 60% is spent on payroll and you maintain the necessary amounts of employees that you had in the reference periods, which we are assuming are the same ones from round one. So for round one, for anyone applying for round one, they made you compare the number of head counts based on FTE full-time equivalents, which is its own computation, but just assume 1 for any part full-time and 0.5 for any part-time. You can compare that number to the number of employees you had during January 1st, 2020 through February 29th, 2020, or February 15th, 2019 through 6/30, 2019. And they're also allowing now an additional 12-week period that you can select after May to choose to compare to. So maintaining payroll similar to how you had it pre-closure, pre-coronavirus business-related closure format, and maintaining the same amounts of wages that you had paid. The details of that we expect will change a bit in the second round, but they haven't announced that. They should, so that people can know exactly how to qualify. So we are assuming it's going to be the same reference periods as were in existence in round one. Question for the speaker: if you have to look at one quarter in 2020 compared to 2019, does it count as income on the quarter you received the first round of PPP? No. So if the quarter that you want to compare is the quarter that you received the PPP funds, exclude those from gross receipts, as those amounts are explicitly not included in your gross receipts calculation. Okay. There are 2 of us in a company. We do not take salary, but equal owners draws. Do we check SBA industry or SBA alternative size standards? So I believe the question relates to a partnership. Karen, if you can elaborate. There are 2 of us in a company. We do not take a salary, but equal owners draws. So long as that, go ahead.
Yeah, we are not a partnership. It's an LLC. We're not a partnership, but we do take equal owners draws.
So you file a Schedule C in your Form 1040?
Right.
Okay. So then for each of you individually, you'll apply based on what you have on line 31.
Okay.
For your 20.
But for that particular section on the application, I just wasn't sure what to.
If I might interject,
Yeah,
I'm Mary. I'm
That's the other
person. So we actually are an S corp, and so we actually file a Schedule K, not C.
Okay, so then you would mark S corp, and then the issue is that with S corps, if you don't have yourself as salaried, like if you don't have a wage subject to payroll taxes, you may not be eligible, because only amounts that were subject to self-employment or payroll taxes are what is considered eligible. So let me show you 1120S. The following is what's used to calculate the maximum loan amount for S corporations. And because they expect anyone that owns an S corp to have some form of salary, then they're only taking salary into consideration when issuing the PPP. but it is common to only take a distribution as draws, not subject to salary. However, then you won't be eligible to apply for the PPP because it's only going to be based on salary, and S corps they expect have a portion taken as salary for the owners. It's a little, that's a very common, where things are good tax wise, not necessarily good. They didn't end up being that great PPP wise. And let me try to quickly explain. When you have an S corp, the benefit is that only the portion you assign yourself as a salary is subject to those self-employment taxes, that 15.3%. Everything else you take out as a through K1 as a distribution or business income is not going to be subject to those same payroll taxes. So that's why the IRS says some portion should be, even though it doesn't always have to be the case, but it has to be a fair and reasonable portion that's considered salary that's being assigned to one of the owners. Is that amount's going to pay self payroll taxes? The amount taken out from a K1 of an S corp is not. When you're when you have a partnership 1065, basically everything in a K1 can sometimes be considered subject to self-employment tax, which is why there's a big benefit for S corps. But when it comes to the PPP, only salaries for S corps will count for obtaining a PPP loan amount.
Okay, thank you.
No problem. And I also saw some clients, some contacts of ours had wanted to perhaps not have such a high expenses so that their schedule line in 31 was a bit higher because they would qualify for a bigger loan. But let me show you what happens when that happens. It's good at the moment. So let's say that he had the 200,000 in that, and then they put $150,000 in expenses, some expenses, travel or phone. Now, if you have $100,000 there, that actually should have been 50,000, but you're not necessarily going to take all the expenses, you will get a loan of 20,833, basically because that's that divided by 12 times 2.5, and this is the same cap that you keep hearing about. Now, when you come to file your tax return, you're going to have $100,000 in net income, and you're going to be subject to payroll taxes on this. And then the following year, when you have the same amounts of revenue, you can't all of a sudden deduct again. So this is only good if 100% the income's there, but some people have tried to overstate it. It's okay for the loan amount, but now you're going to be subject to self-employment taxes and income tax on that income. And you've kind of set a precedent with the IRS that at this amount of revenue, you only have these amounts of expenses. So this is a big forewarning for if you hear of anyone saying like, oh, well, maybe I won't take that many expenses this year and have a higher income, get a higher loan. That's fine and dandy, but then comes income tax time and self-employment taxes are going to come back to bite you, as well as federal income tax. So this is to be managed delicately. Okay. Can someone get first draw if they received a small business loan? Yes. If you received an SBA loan, as long as you're current and you're not in default, you can still get a PPP loan. Only if you got the shuttered venue grant can you not obtain the PPP. And also, if you applied for any FFCRA credits, the Families First Coronavirus CARES Act credits, because you paid wages for an employee even though they were sick or out on quarantine, and you therefore got a tax credit for that, those payroll amounts don't necessarily count in determining your total payroll costs. That's a fully loaded statement, so I'm happy to discuss it more specifically, but FFCRA credits have to be removed when computing your payroll costs. Okay, for the second draw, my bank says you have to apply for forgiveness. That was not the case. Okay, I think we answered all of the questions. If I didn't, please go ahead and shoot me an email. But last thing I saw about the Schedule C, if you didn't complete, how to proceed if we do not have Form Schedule C or Schedule S for 2019, please reach out to me so I can see exactly how you filed, because perhaps that form should have been included.
How are we doing?
Sorry?
How are you doing? I think, I think you've
I-
answered most of the questions. Do you
I-
think so, Michael?
Yeah, I think that you did a fabulous job, and I'm going to speak for almost everyone here. You are a wealth of information, and we probably could go on for
Unbelievable
another
wealth
hour.
of information.
Oh, thanks.
Wonderful,
My
great
God.
questions, and yeah.
I've heard them all, so happy to answer anything offline. We can assist you, but we're doing this as a courtesy to the community. Please don't feel obligated to work with us in any capacity. Happy to answer these questions. I have 5 people dedicated just for this portion, so.
So Nicole, there was one question that I'll just ask you, and it was kind of at the end, and it says, are there financial professionals available that we could hire that could further help with the application process if our accountant cannot? So would that be, let's say as an example, your office, you guys are available to
Yes,
help
we
with
can.
people that
I-
need this?
Many times people just need some guidance and direction for that. Complimentary, again, this is very easy for me to answer. I don't have my own clients that I have to take care of. We have 100 CPAs working on that.
Right?
If you need us to do the accounting in order to determine your gross receipts, we can do that as a service and assist you with your application. But for many
Alright,
people,
perfect.
the gross receipts, amount of invoices, you don't have to have your financials done to determine how much you invoice one year to the other year. So happy to.
Perfect. And with the PowerPoint that you reviewed with that wealth of information, will you be providing that or sending that
Yes.
to Elaine or anything? So Elaine can send it out?
I'll send that to Elaine as well as these other PDFs that come directly from the SBA. I'll share that with her. as
Perfect.
19 pages and.
All right. Any other questions, Elaine, anything? And otherwise we'll wrap it up. And I will echo Michael's comment. I congratulate you on your program, what you provided with us today. And without a doubt, you are a wealth of information on this topic.
Thank you very much. I appreciate that. Happy to help. Got to do what we got to do during these times. So thanks again.
Anything else, Elaine? Otherwise, I'll close it up.
May I ask one question? Every time I try to type, I get disconnected.
Sure, ask.
Did you ever go over exactly which form you used to file for the forgiveness?
The forgiveness. There is no form to apply for the forgiveness so much as the Excel that I shared, but we can do a forgiveness webinar, which is totally different than applying another round because that'll be another 30 minutes. I can go into it, but
Perfect. Elaine will reach out to you regarding that. Thank you, Nicole.
covering purely forgiveness topics, we can do another round 2 webinar just for needing forgiveness and applying for forgiveness round 1 or this second round.
Perfect.
Thank
Thank
you.
you, Nicole.
Okay.
All right. So what I'd like to do is thank Mr. Stern, Michael Stern, for his time again today. We're just approaching 1:15. There will be, as always, a video recording of this meeting available shortly. Elaine will send, let's say, a package out, which will have the video recording of today's meeting. You can go back when you have nothing else and go over the wealth of information again, as well as Nicole's PowerPoint. And again, thank you. Thank you, Nicole Cunningham from H&Company. I think you've answered all the questions, so I don't really think there was anything else for Althea to answer. But as always, thank you for being here with us. Everybody, thank you for attending. Thank you to our sister and partner chambers for joining us today and everyone that participated in the Zoom meeting. If you have any further information or questions, again, Elaine will be sending out all of the information. And from the Aventura Chamber of Commerce, Elaine, staff, and myself, thank you to everyone. Thank you, Nicole, and everyone. Have a great day today. Stay safe.
Thank you. Have a good day. Bye.